Harsha, let me start the conversation by understanding from you as to, of course, public markets have been flattish maybe over the last year or so. Give us a sense on what's the kind of traction that private markets are seeing. Of course, for a long time, it was a competitive landscape. But now that we've seen the kind of move we've seen over the last year on the Nifty 50, what's the sense like in private markets? Are they getting better? Give us a sense.
Look, I think that we invest across the spectrum in public and private markets. And we've actually found it very challenging to make investments in the public market the last few years. It's just been, we just don't find the value. And large companies which are well run, each one has its own challenges in terms of growth. Smaller companies we find are more than fully priced in most cases. On the private side, we are in fact, we've never seen anything as exciting as it is now, simply because there are so many inflection points across industries and there's so much change taking place that one can see future profit pools across a lot of spaces, which are younger companies, but therefore they afford a lot of, good investment risk-adjusted opportunities. AI seems to be the hottest sort of thing everyone keeps talking about. I don't think that in India, the infrastructure side of AI is really something that affords many opportunities because it's a much more a global play rather than a local play. But many AI applications into specific domains, one will see a lot of new businesses starting up, and one will see them scaling up. In fact, on the infrastructure side, if you look at the more than $2 trillion that everybody has invested in the sector, generating revenues of less than $25 billion, you've got to assume that, and the steep hikes in valuations of all the businesses doing this, you have to assume that there's possibly it's a bit of a bubble territory, which is great news because usually no revolutionary technology ever gets adopted in humankind unless it's accompanied by a bubble. But what will make money and what is a great investment opportunity are those who can use AI smartly, incorporate it in their business, treat it as a fundamental infrastructure play rather than just a tactical, productivity optimization play. Similarly, in healthcare also, you're seeing so many different, the entire genomics, personalization, and the customized therapies and the large molecule sort of therapies. You're seeing a whole sway of new things which are happening, which will hurt, previous profit pools. On the pharma side, also on the domestic market, there's a regulatory driven push for the Jan Ayushudhi, which is the government-backed generics play. I think once the market figures out that the government's actually been implementing very strong quality controls in the type of drugs which hit that ecosystem, I think you will see a market shift in that direction. And I think that that would have its own implications in the larger pharma ecosystem in India. On space, again, AI applications are increasing use cases. In fact, the latest research tends to suggest that even solar panels in space and data centers housed in space might be a new sort of area. But the short point I'm trying to make is that there is a lot of revolutionary new things which are happening. And let's face one thing, AI is the number of scientists available globally multiplied by, infinity. So the amount of change that will happen and the rate of change is going to accelerate, brings a lot of risks to incumbents, but also a lot of opportunities to people who are smart about missing them.
Absolutely. But Rahul, for the retail investor who's convinced on the India story, he doesn't have option to go via the private equity route, right? Or invest in the unlisted space. If you were to really sort of draw a comparison to the AI boom, I guess consumer tech is where you are seeing a perfect sort of alignment with AI, if you will. You think that's a space, even though it's completely fully discovered? You think one needs to keep a close eye on that, and that structurally is looking like the strong story?
It is a strong story, and there is definitely a lot of business momentum and a strong business case there. On valuations, I might have my um, own sort of reservations there, but it is definitely now you have to understand that in these kind of situations, valuations always run ahead of reality because people are looking at not 1 year but 5, 10, 20 years of profit pools and discounting them upfront. When it works out very well, then it looks visionary. When it doesn't, you get hurt very badly. But often you reach a point in the cycle where there's too much discounting too early, and I think that you might be sort of facing that with a lot of the names. Some of the names are still okay, but I think that's one slight challenge. But like I'm saying, people who are using AI in their traditional businesses, right, which are not well discovered, but you hear managements talking about how they're fundamentally changing something. I mean, I know a lot of auto ancillary companies, for example, who are using AI and changing energy conversion ratios of motors. So these kinds of applications, or people using AI to do predictive maintenance work. Um, you'll see a lot more, a broader application base, and that's where there are much more opportunities and disruptive opportunities. Even on the listed market, I think you'll see a lot of names which fit that criteria.
Rahul, opportune time to also ask you what the impact of that on Indian IT will be, in your opinion.
Indian IT look has seen its sort of heydays of growth behind it. Not because the market's going to need less IT. I think, even adopting AI, who's going to help companies? It's going to be these large IT companies. But the reason I am a little bit more circumspect about the larger IT companies is that if you look at the projects in the AI era today, they are getting smaller and your selling cost is not coming down. So if you look at the sales cost as a percentage of your overall revenue, that will start to rise. And most of the projects are also, that multi-year, multi-size projects are no longer sort of in vogue. They are as a trend that will get smaller. Right now, MIT studies suggest that it's not, AI has not impacted the efficiency in coding that much. But I think it's a matter of time. I mean, the speed at which it's improving. So one has to be a little bit cautious about it. And I think the big challenge that, a lot of people are always assuming that Indian IT has so much of capital, such strong balance sheets, they should be able to invest in the product and the innovative ecosystem easily. But it's a big cultural jump, right? In a service-led model, you're keeping the customer happy. Your predictability of outcomes is very important. Failure is not tolerated well. In the innovative part of the ecosystem, you need to have the tolerance for failure. You need to keep experimenting, trying new things. And so therefore, it requires a different mindset. So I wouldn't sort of beat up the large Indian IT companies too much on this. There are different cultures which are required. And if they want to get into these innovative spaces, I think they'll have to set up 100% subsidiaries and or at least a separate business division which they keep away from their overall way in which the business is managed, and maybe have it reporting to the board separately or to the CEO separately from the rest, and have a different culture. That's the only way that I think they'll be able to take advantage of this longer term. Short term, it's great because this, helping companies adopt AI, introduction of more cybersecurity, etc. I think these trends will help them stay relevant, at least in the medium term.
Sure. But Rahul, what about just pure play consumption? And now with the GST rationalization, the fillip that it's likely to get, I mean, we're already hearing the murmurs from most of Motown saying that, their sales definitely have seen a big jump up with the onset of the festive season. Anything that's looking interesting there to you?
So I think two things. One, I think that, once it was announced that before it was implemented, I think you saw a big slowdown in consumption. Everybody deferred consumption. So you're seeing a big bump up there. Two, I think that, look, India is a growth market. I mean, in the recent past, growth has really slowed down, and nominal and real both, right? And I think that's been putting pressure on the market overall. But I think that growth will come back. And, when you reduce indirect taxes, that's usually the best place to reduce taxes in an economy. It will show up with a little bit of lag. I think we'll be back to a sort of very reasonable growth trajectory. But if you look at the larger companies, with a few exceptions, you're not seeing them being the largest beneficiary of that growth. It seems to be much more the medium-sized companies doing it. And I think that you are seeing across different ecosystems migration of profit pools. And I think this is something which any investor needs to sort of keep an eye out for.
Right. Thank you so much, all, for coming in, speaking with us. Been great chatting with you. We'll let you go on that note. Senco Gold.
Thank you.
Right. So